Hello there, guys and gals of the YouTube world. Hopefully you're doing outstanding. It is Saturday, May 21st in the year 2022. And as always, especially this one, I'm not a financial advisor, I'm not a CPA, I'm not an attorney, and I'm just Mazske. I share stories and I share my opinion. I never tell you what to do. I was reading the print edition of the Wall Street Journal this morning. I subscribe to the digital version, $4 a month. I actually tried to cancel that a while back, a month or so back, and they finally said, well, how about if we give you another 6 months at $4 a month? Okay, sure. But what I also get is the print edition on the weekend that was kind of thrown in for free. I think I'll stop getting this soon. I think it's expiring soon. I had like a free year of it or something. So anyway, in today's edition, let's see, I think it's this story right here. It says the S&P 500 briefly dips into a bear market. And then this one right here, if you can read that, investors struggle with pain as market hammers savings. All right, on this one about briefly dipping into a bear market, they say, I guess one point yesterday, stocks, S&P 500 slid into, it was down at least 20% from January, from its January peak. Now, it seems to me, I read somewhere that the stock market peaked back in November. So if it's January and it was 20% yesterday, but then it pulled back to 19 point something. If we go back to November, I'm guessing, I didn't pull it up, I'm guessing that we're over 20%. And the definition, I think, is a bear market is down 20%. Big deal. All right, but the NASDAQ is down even more. I don't know if it really says it in here. Dow Jones was down, NASDAQ was down. NASDAQ, I can't remember what I saw, down 30% or so in recent months. So the question here lies, if you have a lot of stocks and your stocks are down, I'll give you an example of somebody I know. Their stock portfolio was worth about $200,000. They told me just the other day their stock portfolio is now worth approximately $130,000. So it's down $70,000, so that's about 35%, I guess. It's down. Okay, and I know what this person holds. They hold a lot of tech stocks. Tech stocks are down a lot. This person is young. They're still in their 20s. All right, so with that being said, what would Mazske do? Mazske, knowing what he knows now, if Mazske had a large stock portfolio, because Mazske, if you know me, going back 20 years or more, I was diehard into stock investing. I would talk to you about stock investing. I got my sons to start investing in stocks. I got other individuals, I helped them to get started in stocks. All of my investments were 100% in the stock market. Times have changed. I am now down to having almost nothing in stocks. Almost. And that's just my personal choice. That's what I've done. All right. Because I discovered when I bought my first rental property, January 2017, by 2018 or early 2019, I ran the numbers over and over and over and over again, and I realized, Mazske, your stock portfolio is averaging like 18% a year since 2005, but your real estate is giving you better numbers. Because one thing I ran that solidified that for me is that said, well, if I could get up to $1 million in the stocks, in a 401k, in a Roth, whatever, $1 million altogether, the safe withdrawal rate is roughly 4%, and that's $40,000. And that was my plan, but I realized it would take me longer, much longer to get to $1 million because I was far from it. So then I was like, but with real estate, I realized I could invest way less than $1 million, and I could have positive cash flow in the six figures, over $100,000 a year, which much less invested than if I invested in stocks. Okay, so when I realized that, it took me a little bit because it was hard. It was very hard to make the decision to sell stocks, and I started slowly, but I ended up selling everything in my Roth IRA and transferred it to a self-directed Roth IRA, where then I bought a rental house, paid cash for it. Even though I know when you pay cash for a rental house, the return isn't as good as when you leverage it. And I'm not going to get into that, okay, in this video. I'll talk about it in other videos. Then I did the same thing in the Mrs. Roth IRA. I sold the stocks, put it into her self-directed Roth IRA, all right? And the time since then, I sold stocks, all the stocks pretty much, in my normal stock brokerage account. And I used it, I put that more into oil drilling, I believe, or mineral rights, one of them. Okay, so I am pretty much 99% out of stocks. So with this video, because I've had some folks ask me, what should I do? They're asking me, what should I do? And I say, I can only tell you what I would do, okay? I know when the market drops. So let's say it's dropped 20% to 30%. I know it may drop more. I don't know how much more. It could drop 30, 40, 50%. I don't know how far it'll drop. But when it drops, it historically should tell you that it will go back up. But it may take time. Sometimes stocks will linger. If you look at history, there was a 15-year period where they really didn't go up over 15 years. Sure, certain individual stocks may, but the S&P 500, just the general market did not go up over a 15-year period. I'm not saying we're getting into that now, but Michael Zuber is famous for saying we're repeating the 70s. It started in the late 60s through the 70s, a 15-year period where the stock market lingered. So, but if I had my money in stocks right now, and let's say I had a rental house or 2 or 3, and I realized, wow, the numbers for rental property is better than stocks, and there's less volatility. I don't have to worry about the market crashing and my portfolio getting cut in half. I just get my rent checks month after month. There's nothing sexy about it. It's not beautiful. It's not like I'm getting rich overnight. I'm getting $250 a month positive cash flow, or $300 a month positive cash flow after paying my mortgage, taxes, insurance, after holding out, say, 20% for vacancies, repairs, and capital expenditures, and after paying my property manager their fee, and after paying any other expenses I may have to pay, a water bill, cutting the grass, whatever it may be, any other expenses. And if I still make positive cash flow, $250, $300 a month, I had someone tell me, that's it? Yes. Yes. That's it. But you are having your tenant pay your mortgage for you and all of your expenses on a property that most people, they spend their life paying that mortgage to own their own personal house. But now you're having someone else pay that mortgage. Plus, you get so many tax write-offs, your tax burden is minimal for any rental property you own. For the amount of cash flow you get in, your tax is much less. Okay, and there's other positive benefits to it. So knowing what I know now, if Mazske could go back in time, and Mazske, I can't remember exactly what, say, rental properties would have cost me back in the year 2000, 2001. I don't know, probably under 100, in my area, if I started in my area, I could probably get some $50,000 or $60,000. I'm guessing back then, okay. So my stock portfolio, I think, was about $16,000 at its peak, 1999, 2000. Say it had dropped, say I had sold at this point, it had dropped 20, 30%, and let's say it was at it was worth $12,000. If I had sold it then and could have taken that $12,000, that would have bought me one rental property. If I could have found one, which I would have, for $50,000, $60,000, $70,000, I could have got one rental property. And by doing that, if I had gotten positive cash flow of around $250 a month, I would start saving that positive cash flow. And then I would get a second rental house. It may take me a couple of years because I wasn't making a lot of money. But by the time I got my second rental house, I think I would have realized, whoa, doggy, this is the way to do it. I just got to keep plugging away. And say I only got a rental house every 2, 3, 4 years. Every time I get one, my positive cash flow goes up. The amount of cash that I can save goes up. It's not a race. Doesn't happen overnight. But then if I get to 3, to 4, to 5, to 6, and I get up to 10, it took me 10 years, but I got to 10 rental properties. And let's say the first one that was making $250 a month is now making $400 a month because rents do go up. But let's say the average of all 10, because I've been buying them throughout 10 years, was, for easy math, it's $300 a month. Okay, that means if I have 10 rental properties and I'm averaging $300 a month, I'm getting $3,000 a month in positive cash flow. $3,000 a month times 12 is $36,000. Back, this would have been 10 years from say 2000 to 2010. $36,000 in 2010 was probably more than what starting pay was in the police department that I was working in. It might have been the same as what I was making then. Might have been less, it might have been a little bit more. I'd have to look up my stats from back then, which I don't have them handy to check. Okay? So knowing what I know now, I'm not telling you what to do. But if I had money in stocks, I'd figure out a way to get a rental house. And sure, houses right now are more expensive than they used to be. But the market is starting to slow just a bit. Okay? I don't think prices are going to pull back. They might pull back just a little bit. I don't think they're going to pull back as a whole. But I think what you'll find as the market slows, you can be selective and you might have to make multiple offers, but you will find sellers who become more desperate and they're willing to sell for less because they need to sell. For whatever reason, they need to sell. And you can go in and make an offer and perhaps get it easier 3 months from now than you could have 3 months ago. Okay? So sure, houses are expensive, but houses are always expensive. Always, it seems like. All right, so I just told you what I would do. If I had a stock portfolio, I would sell it and put it into real estate. That's what Mazske would do. I'm not telling you what to do. Some of you I know personally. I know you have stocks. I'm not telling you what to do. Run the numbers yourself. You all, if you know me, odds are you have rental property. Do you just want to be diversified? Why? I'm going to throw that out. Why do you want to be diversified into stocks? If you know the stock market is volatile, if you know that when the time comes and you want to tap into it, it may get cut in half with its value. But you could just start building a real estate portfolio, and by the time you're 50, instead of having 10, now you got 30 or 40 or 50 houses. You're fine. You're more than fine. You're doing good. All right? Does that make sense? I hope it makes sense. All right, and once you get accredited, because that means you have a net worth of $1 million, and I'm not going to get into the definition of accreditation, but once you get accredited, you do have other options if you want to invest in them. I did mention oil drilling. I have oil drilling and mineral rights acreage. Those are two. There's also syndications. Sometimes they require you to be accredited. But it's not the end all. You don't have to become accredited. But it's just something to think about. It's just an option. Because right now, I've said it in other videos, we're in that perfect storm for investing into energy, which I dare say I think it's better than real estate. But for long-term investing, real estate is what will get you wealthy. So if you are accredited and you're interested in oil, shoot me an email. It's always in the description below. Okay? All right. Enough said. I may try to make a thumbnail for this video. If so, you'll see a thumbnail. If you don't, you know I need to practice more at making thumbnails. All right. Take care. Stay safe. Mazske is signing out.